Devang Mehta, VP and Head Equity Sales, and Anand Rathi joins us on the show. Devang, hi, afternoon. First, a word on the banks, because it's a little alarming the way the banking pack has been falling the last 3 days.
Afternoon, Aisha. In fact, what we are observing in this fall is that the stocks which had risen the most have corrected, and I think banks was one of the prime runners in the so-called rally. So I guess there can be a little bit of a correction in banks, though would be very stock specific in terms of banks. One thing very heartening that I saw today was the huge appetite for the Citibank stake sale of HDFC, which a lot of plethora of investors have come into the stock, and that clearly shows that the appetite for quality paper, of quality Indian paper, is still there in the market.
Devang, what do you make of the broader market though? Do you think we're now in a phase of prolonged consolidation, or do you think this is just a temporary setback and we could be looking at a rally going forward as well?
I guess there is more actually upside than downside, which one sees in this market, because the liquidity has been robust, the sentiment has been improving, to say the least. Also, the ongoing IPO of MCX seems to be reviving a lot of retail interest, also institutional interest in quality paper. Plus, what I think is there are all signs that the fundamentals seem to be improving, and government has started to do a lot of initiatives on power companies as well as about the coal linkages. So I guess sentiment is good. Maybe on a correction or a little bit of a consolidation, market would find more participants, and if Nifty comes to around say 5300, 5350, it would be an attractive level for people to start investing again in select stocks.
Devang, what about the entire infrastructure space? Because while we have seen a great amount of rally, it seems like now increasingly these were just mere trading plays because they had been the most beaten down pockets.
Yeah, exactly. During my last interaction on your channel, I had said that it's time that one rebalances its portfolio, comes out of the so-called defensives and get into this aggressive stocks. And people have made almost 50%, 100% profits in individual stocks. So I guess there can be a little bit of a lackluster type of a trade in such counters, but we would at this point of time prefer some stocks which would benefit maybe from budget, something in the defense sector like BEL, or something from the capital goods sector like Crompton Greaves, which is a beaten down stock. So I think this stocks which have not done well so far could find favor with the investors.
You've just mentioned the two names from the infra space as well as capital goods, Devang. But is there anything that you like out of the mid caps or the large caps which still is a good buy at the current levels?
Yeah, in the mid-cap space, we would prefer some agri and agri stocks, which could again also be running up in anticipation of something good coming out of the budget. Stocks like Coromandel International, something like Rallis, Escorts, all these stocks we are liking a lot. All of these have fundamentally sound balance sheets, plus a lot of good valuation support that these companies have. So I guess it's time that one needs to focus more on a stock-specific approach as market consolidates around these levels.
Devang, what about the power space? Even though there have been some, like you addressed it as well, there have been some good reform moves by the government, but huge amount of uncertainty on gas allocation to power plants. There is a meeting of a ministerial panel later this evening as well. What is your outlook on power stocks?
Yeah, in fact, I think this sector would surely be re-rated maybe in the medium to long term, as government has already started taking a lot of initiatives in the correct direction, and the CEOs meeting with the PM and also with the necessary authorities, also with the important authorities. I think clarity would emerge in this space, and a lot of power production would come on stream, and I feel some of the stocks like NTPC primarily could be re-rated going forward.